Hello everyone, welcome to my channel, and today we will speak about a company known as PCBL Ltd. Initially it was known as Philip Carbon Black Limited. Now it is termed as PCBL Ltd. So let me share my screen with you. Alright, so before we begin the video, let me give the disclaimer. This video is not an investment advice. Equity investing is a SEBI registered investment advisory company. At the time of making this video, we do not have any exposure to this company. However, going ahead, Tequity or their clients may have exposure to this company. So please consult your financial advisor before making any investment decision. All right, so about the company PCBL Limited, initially, like I said to you, it was called as Philip Carbon Black Limited. However, the name of the company was changed to PCBL Limited to ensure that it is more representative of their products. Now, what do I exactly mean by that? Let me tell you as we move ahead in the video. So this is a RP Sanjeev Goenka Group company, RPSG Group company. It is the largest company domestically which manufactures carbon black, and it is the 7th largest company globally by sales. Total functional capacity of the company is around 600 kilotons, and another 187 kilotons is the capacity that they are building. The company has around 3 to 5% market share. Focus is on improving and moving the products up the value chain. Okay, so as we move ahead in the video, I'll tell you exactly what do I mean by that. And the important point to note, the last point, is that the tire segment, the automotive segment or the tire segment is still a very dominant contributor for the company, with about 65% of the business coming from the tire segment, and 27% business coming from the performance chemicals, and 8% business coming from the specialty black. Okay. So if you look at the point number 4, okay, point number 5, I have said that the focus is now on moving up the value chain. Okay, so basically the carbon black segment, or the contribution that is going to the tire segment, which is about 65%. This is not a very high margin business for the company, and now their focus is to move towards the performance chemicals and the specialty black segment, which is still about 35%. Okay, so still the majority of the business is coming from carbon black, which is not a very high margin product for the company. Okay, so if you see on the right, I have given a couple of applications of where carbon black is used. Okay, it is used in plastics, it is used in coatings, it is used in paints and inks, and it is used as a conductive material. Okay, now this is a very interesting segment for the company, which we will speak about as we move ahead in the video. Right. So talking about the uses of carbon black. Okay. So like I said, around 65% of the use goes into the tire segment. Okay. Around 28% goes into the performance chemicals, and the remaining goes into the specialty black segment. Right. Now, where exactly is carbon black used? Okay. Other than the tire segment, which I have already told you about. Okay. There are a couple of other applications for carbon black. Okay. So number 1, okay, this is used as a reinforcing agent and shock absorbent in manufacturing of various industrial rubbers. Okay, so see, rubbers, tires is just one of the applications of rubbers. Other than tires which are used in automobiles, okay, there are many other applications of rubber in the industrial segment. Okay, so carbon black is used as a reinforcing agent and shock absorbent in industrial rubbers. Okay. Secondly, due to its high strength and anti-static properties. Now, what do I mean by anti-static properties? We will discuss as we move ahead in the video. Okay, and ability to absorb UV rays. Okay, carbon black is used extensively in plastics manufacturing. Right. So, if you go ahead in the earlier slide, I told you that carbon black is used in plastics manufacturing. Now, why it is so? Because carbon black has properties of absorbing ultraviolet rays or UV rays. Okay. So the point that I'm trying to make here is the application predominantly which is there today is in the rubber segment. However, there are many other applications which are trying to evolve, and because of which the industry itself is trying to put itself in a condition where there will be many more applications of carbon black than what are there today. Okay, and finally, it is used in additive in lithium-ion batteries due to its conductive properties. Right. So if you go back to the earlier slide, I told you that there are many conductive properties which we will talk about. Right. So basically, carbon black is used as an additive, for lithium-ion batteries. Okay. Now, you must be knowing that there's a lot of discussion around electric vehicles and lithium-ion batteries. So this is one of the interesting segments that you can look into if you're trying to play some proxy play in the lithium-ion batteries or the electric vehicle segment. Okay. All right. Moving on to the next slide. So let us do a little bit of global market overview. Okay. So Birla Carbon and Cabot Corporation are the largest two players. Okay. The market is concentrated in the hands of bigger players. All right. Total production capacity is around 17 billion metric tons. All right. Out of which around 1 million metric tons, not even 1 million, slightly lesser than 1 billion is with this company, RP Goenka company, PCBL Ltd. Okay. Now, an interesting point is that China accounts for 1/3 of the global capacity. Now, this is something that that has to be noted. Okay, so this is again one of those chemical products where China is still the it is still the dominant player. All right. Since the market is fairly consolidated, economies of scale is very important, and it plays a big role in the profitability. Okay. Now, if you just look at this particular this particular figure that I have given here. Okay. So this is a figure I have taken from a couple of research reports. All right. So the carbon black market is fairly consolidated. Okay. So there are only a couple of players which are which have a big chunk of the market share. Okay. And it is not one of those fragmented industries where there are lots of small players. Okay. So because of this, what happens is that economies of scale is extremely important. Okay. And companies which are able to grow their business or or increase their top line, okay, automatically their margins, they keep improving because of something called as operating leverage. All right. So we will not talk about operating leverage in this video because it might become too big. Okay. And finally, the global carbon black market is expected to grow at 4 to 5%. All right. Now, I just want you to remember this figure that the global carbon black market is expected to grow at only 4 to 5%. All right. So now see, that's not a very very impressive number. Okay, on the top line. However, there are some other triggers which would be very helpful for this company as far as growth in share price is concerned. All right. Now, coming to this figure on the left, okay, if you see the application of carbon black by by market or by its usage, okay, you can see that around a big chunk it still comes from the rubber segment, whether it is tire or industrial rubber, okay, and then the remaining is almost equally distributed into coatings or plastics or textile fiber or into toner and printing ink. All right. So, like I said, the present applications of carbon black is mainly it goes into rubbers, whether it is automotive or non-automotive. However, there are other applications which are evolving as we move ahead. Okay. Now, on the right, if you see this particular figure, this is a very interesting figure to look at, which says that for a typical 17-inch SUV tire, okay, the fixed cost is around 35%. The variable cost is around 35%. Okay. The carbon black cost is only 3%. Okay. Now, this is something to be noted that if carbon black, it has only 3% of the overall pie of a 17-inch typical 17-inch SUV tire. Okay. It has scope of increasing the percentage in this particular pie chart. All right. I'm not saying this is going to happen, but this is definitely a possibility which could be one of the triggers for more consumption of, more realization for the carbon black companies. Okay. And the remaining 31% is the gross margin. All right. So summing up this particular slide, it is a fairly concentrated market, which is concentrated in the hands of a few players. Okay. Birla Carbon and Cabot Corporation are the leaders, and the company that we are discussing, PCBL Limited, is one of the market leaders in this particular segment. Moving on. All right. So there's a very important consideration to be made as far as this particular company is concerned. Manufacturing or production of carbon black, it leads to emission of certain gases, namely carbon dioxide, nitrogen oxide, carbon monoxide, sulfur dioxide, and some particulate matter. All right. Now, this, these gases and particulate matter is not just harmful to the environment, but it has some immediate effects or ramifications on human health as well. Okay. So there is a lot of research that is going on into finding alternatives to the carbon black market that can be used in the tire industry. Okay. Please note that lignin is a good alternate material. However, there are challenges because producing it at that scale and within the cost of carbon black manufacturing, it is extremely challenging. Okay. Now, to give you some points, in 1990s, so the research on using alternate materials is not something, it's not something that is newly developed, but it has been going on since 1990s, where Michelin, which is one of the leaders in the tire segment, they introduced the concept of green tires. Okay, and what they did was they used silica instead of carbon black. Okay, the problem that they faced was the bonding between silica and rubber was not very strong. All right, and later on they used something called as organosilane. They used organosilane, and they try to increase the bonding between silica and rubber. Okay, so this research has been continuing since 2000 since 1990s, and in 2015 a company called as Evonik, it developed liquid polybutadiene, and by doing that they try to increase the bonding between silica and the rubber. Okay, so point that I'm trying to make here is environmental angle is extremely important with the growing the discussion around ESG. Okay, and this is I'm sorry, this is one of the segments which is very susceptible to this particular angle because the emissions that they do, the gases that I mentioned earlier, okay, it is a significant amount. Okay, so it may happen that the research around silica and the bonding between silica and rubber may gather some steam going ahead, and because of which the carbon black market might take a hit. So moving on to the next slide. Okay, so this is a very interesting slide I found from the Investor Day presentation for Cabot Corporation. Okay, now see, like I told you, currently the majority of the product is used into the making of used in the making of tires. Okay. However, there are some tailwinds for this industry which could prove very profitable for the players of carbon black. Okay. Firstly, changing mobility landscape. All right. So see, as we move from internal combustion engines to electric vehicles, okay, there are some significant changes which are taking place in the structure of the vehicle, as well as a few important parameters of how mobility has been going on. Okay. Number one, electric vehicles are likely to have a higher torque than a typical IC engine vehicle. Okay. Because of this, what is likely to happen is tires would need quicker replacements, and there would be higher wear and tear in tires. Okay, because of which obviously who will benefit is number one, tire companies, and number two, the suppliers of tire companies, out of which one of the important suppliers is carbon black players. Okay, so as we move from IC engine vehicles to electric vehicles, there would be immediate positive ramifications for the carbon black players. Okay. Number two, increased focus on sustainability. Okay. Now, this particular point is not very relevant to the company that we are discussing. Okay, because we have taken this particular screenshot from the Investor Day presentation of Cabot Corporation. However, what this point particularly says is that because of the increased focus on sustainability, okay, there is a lot of research that is going on in the material space, okay, which we will touch upon as we move ahead. Okay, and becoming a more connected world. Okay, growth of autonomous vehicles and ride sharing. Okay, higher replacement rates and new tire needs. All right. So basically, what this says is that as the growth in miles driven, okay, high frequency of tire use. Okay, so basically, as the world is becoming more global, okay, the number of miles that would be driven in general would be higher, and because of which the use of tire would be higher, and because of which the players in the carbon black market would benefit. I do not really agree very much with this particular point. However, let's continue from here on. Now, what I really want you to notice here is that this particular red, this red mark here, which says that longer range of electric vehicles, okay, will cause a lower ruling resistance and which will cause a growth in the silica market, right? So if you remember earlier, I take you to 2 to 3 slides earlier. Okay, I said here that silica was used as a filler, replace a reinforcement material. However, the bonding between silica and rubber was not very strong. Okay, and there is another point which I mentioned is uh, silica has been a challenge because of the scale involved. Okay, so people have not been able to manufacture, the reinforcement material at that particular price. Okay, however, once we move to EVs, it may happen that the use of silica would become a need of the hour, and because of which the manufacturing would acquire that scale, and because of which silica would take place of carbon black. It may so happen. Okay, but according to me, this is a very important point to monitor. How is the trend in the usage of carbon black in the tire sector? Right. So these are some points that I've taken from a website called as tiremarket.com. It is a pretty reliable website. Okay. So tires for electric vehicles versus tires for conventional vehicles. Okay. So constructed combining the treated rubber compounds plus innovative additives. Okay. And mostly constructed using hard or soft rubber compounds. Right. So basically, for electric vehicles, the tires that would be used, they would need some innovative additives. Okay. So there has been a lot of change that is going on into vehicles, and even tires would require change as we move from IC engine vehicles to electric vehicles. Okay. Secondly, innovative tread designs grew width and pattern. Okay, and regular tread design grew width and pattern. Okay, so there is a change on the width of the tires as well as far as electric vehicles are concerned against the IC engine vehicles. Okay, then for electric vehicles we would need stronger sidewalls, basically stronger tires. Okay, and for regular conventional vehicles we need regular sidewalls, right? Electric vehicle tires are supposed to last longer because they are supposed to be made using some innovative additives to take care of the additional battery weight as well as the higher torque. Okay. Whereas the regular conventional tires that we are presently using, they would, once the EV tires become mainstream, the existing tires would wear out about 30% faster than the EV tires. All right. And of course, the cost for electric vehicle tires is expected to be higher than the cost for the conventional vehicle tires. Okay. So if I take you back to one of the figures that we were discussing, so see, carbon black, it accounts for only 3% of the tire price for a typical 17-inch SUV. Okay, but moving ahead, it is very likely that this particular number of 3% it is going to increase, and because of which players in the carbon black market, okay, they are going to benefit. All right. So moving on to the next slide. So see, there are definitely some tailwinds from electric vehicles. Okay. So if I have to take you back to one of the earlier slides, I told you that this is used as a conductive material in a couple of products. Okay. Now let me talk a little bit about what exactly this conductive material is. Okay. So carbon black is used as a carbon black is it has high electrical conductivity, okay, because of which it is used as an additive in lithium ion battery. Okay, so this could be one of the high growth areas for the company. Okay, so if I talk about the industry, definitely this is one of the high growth areas. However, the point to note is that PCBL is still in the very early stages of research and development for these products. Okay, so I attended the recent conference calls of the company, and they acknowledged that yes, we are in the early stages of development as far as these high electrical conductivity products are concerned. All right. So if I have to talk about the risks, okay, so mainly I would talk about two risks here. Okay, the promoter risk that we generally talk about, I didn't find something which is very alarming as far as the promoter risk is concerned, because The parent group, which is RP Sanjeev Goenka Group, is a reputed group. Okay, so I didn't find any red flags to be highlighted here. Okay. However, talking about the business risk, so see, China as a dominant player, and in whichever products China as a dominant player, there's always a risk of some dynamics changing in the Chinese market, because of which the effects, mainly the adverse effects would be felt on the Indian markets. Okay, so if you remember in 2017, all these carbon black companies, okay, they just shot up, like multi-bagger returns we saw in 2017. That was because the manufacturing in China was reduced because of environmental concerns. Okay, but tomorrow, let's say China decides to increase production of these particular materials, then definitely the adverse effect of all these would be seen in the global markets, and especially the Indian markets. Okay, because China and India, we are very competitive as far as the world looks at us. Okay, market is already consolidated, leaving little scope for further consolidation. So see, Cabot Corporation and Birla Group, they are the top two players in this particular market, and the company that we are discussing, it is the sixth or the seventh player in this market. Okay, so the market is already so consolidated that there is no further scope for any any kind of consolidation happening in the industry. Okay, so see, generally in a fragmented market, what happens is that once a company achieves a particular scale, they start acquiring market share from the smaller players. Okay, because of which economies of scale start playing out and the operating leverage starts playing out. Okay, but in this case, what I really noticed is that there is not much scope for consolidation of the market. Okay, because there are a few big players. Okay, and they are happily operating with the margins that they have been operating at, right? So there is not much scope for a Birla Corp, or for a Cabot Corporation, or even for that matter, PCBL, to acquire market share from the smaller companies, because the smaller companies are already so small that even if the bigger companies acquire market share from them, the effect would not be significant. All right. Thirdly, growth in specialty and performance chemicals would come through R&D, and PCBL is still at the early stage of these research and development initiatives. Okay. Now, I told you about Cabot Corporation. I saw their Investor Day presentation. So the kind of work that a Cabot Corporation is doing and the kind of work that a PCBL is doing, there is a lot of difference. Okay. So PCBL is presently at a stage where they are the seventh largest player, but majority of the revenue still comes from the carbon black, from the product carbon black. Okay, whereas specialty and performance chemicals still occupy a very small percentage. Okay, not very small, but it occupies a significantly lower percentage than what is desired for the margin expansion. Okay. And finally, although the specialty black markets are growing, there is always a risk of substitute products in tire industries. Like I told you about silica. Okay, so there is always a risk for that happening. And now you just imagine if a silica replaces carbon black in the tire segment, what would happen to a company like PCBL, which still has about 65% of the 60 to 65% of the revenues coming from the tire segment, right? So it is a significant risk as far as the company is concerned. Now, to bear that business risk, what kind of valuations are you presently getting? Okay. See, I did a quick discounted cash flow DCF analysis, as well as some comparable analysis like EV to EBITDA and price to earnings. Okay. I think the company is presently fairly valued. Okay. Assuming that there would be good growth in the carbon black market. Okay. Number one. Number two, there would be good opportunities for growth in the alternatives market, like I told you about the research and development initiatives in the performance black and the specialty black, in the performance chemicals and the specialty black segment. Okay. However, the assumption that the market presently is making is that PCBL would be successful in those research and development initiatives, which is not a guarantee. Okay. And finally, one of the big risks that I found out is that any further growth is likely to come on account of margin expansion. Okay, See, the carbon black market is not going to be one which will grow at a 15%, 20% kind of a rate. Okay, the growth in automobile market, okay, or the growth in other underlying markets like plastics, okay, that would be the growth of the carbon black players as well. Okay, of course, if we migrate from IC engines to electric vehicles at a very rapid pace, then yes, that growth in top line would be reflected on the carbon black players as well. Okay. However, there are a couple of years for that particular thing to happen. Okay, and till that point, I feel that the growth in this company and the underlying share price of this particular company or any company in this particular segment, it would come on account of margin expansion. Okay, see, there is not much scope for growth in top line because of consolidation also. Like I told you, this is already a fairly consolidated industry, so it is not going to happen that PCBL acquires a lot of market share from the smaller players and they end up zooming their top line by 15% or 20%. That's a very unlikely thing. So the best thing that we can go for is the growth could come from margin expansion mainly. All right. So what is the final verdict I have on this company is that, see, there is a very high sensitivity to operating margins. Okay, so I'm not presenting the valuation model that I ran. Okay, but I tried a couple of scenarios where I tried changing the operating margin, and the resulting valuation that I got in a DCF or discounted cash flow, it is extremely sensitive to operating margin. Okay, so if there is if the cost of raw material it goes up substantially, or the company is not able to control their manufacturing cost or their employee cost, okay, then it will have a huge impact on the share price, on the profitability of the company, and immediately on the share price of the company. Okay, because of course, like, share price is directly related with profitability, right? So this is one of the very important points which I wanted to highlight to you. Secondly, it is important to observe how the specialty black segment of this company grows. Okay, because like I told you, currently they are making their bread and butter by using, by selling the carbon black products, but that doesn't look very sustainable to me. Okay, so ultimately they have to ensure that they move towards research and development initiatives in the specialty black and the performance chemical segment. Okay, and see, the valuation is fair, but it assumes a lot of things on the optimistic end. That is what I feel. Okay, so my final verdict would be: presently, I'm not invested in this company. None of my clients are invested in this company. But this is a very good company to keep observing, because it is one of the market leaders. It has a good promoter group. It has a good promoter group, and finally, it has something to look forward to. Okay, so as we move from IC engine vehicles to electric vehicles, that migration is going to be very, very interesting as far as the suppliers like Philip Carbon Black Limited are concerned. Okay, so that's all I have for now. Thank you very much for watching this video, and I would request to check out our small case portfolio, which is the Rising Superstars. Okay, so this is the portfolio which is curated, and it has a lot of companies like the one we discussed right now. Okay, so thank you, and I hope you subscribe to our channel. Thank you very much.